Japan is usually seen as a safe haven, with a currency that rallies during tumultuous times and a stock market which acts as a good diversifier. But in this video, we'll see how Japan could transform from a bastion of stability into a force for global destabilization. This video is sponsored by NordPass, which lets you securely store your passwords across all of your devices. So let's see how Japan could transform into a force of destabilization in a bit more detail. Let's begin by looking at why Japan matters. And the primary reason is that it has a lot of capital which it invests across the world. So if we look at the largest funds in the world, you can see that two of them are in Japan, with GPIF, that's the Government Pension Investment Fund, but also Postbank having $1.5 trillion in assets or more. That's comparable with CIC, which invests China's foreign exchange reserves, the Norway Pension Fund, which is a sovereign wealth fund, and it's much bigger than CalPERS, which is the biggest US pension fund. And if we compare the biggest hedge fund in the world, that's Bridgewater, it's tiny by comparison. So when this money sloshes around the world, it can certainly destabilize markets if it happens rapidly. And as we said at the outset, usually the yen is thought of as a safe haven, but what happened in 2022 was a very rapid loss in value of the yen versus the dollar. This happened with other currencies, but not to such a large degree. Now we have seen that reverse, but what's still true is that the yen is very volatile compared to history. Currently, the volatility is around 15% per year, which is very high for what's seen as a safe haven currency. Also, that volatility will have a consequence, as we'll see later on, when it comes to investing abroad for Japanese investors. At the heart of Japan's economic problems is a huge demographic problem. And you can see that reflected in this comment from the Japanese Prime Minister, who says Japan's standing on the verge of whether we can continue to function as a society. So what he's trying to do is focus on policies which promote child rearing. And you can see the problem immediately if you look at the population of Japan over time since 1960. Notice that while other countries are still growing, Japan has now flatlined and is starting to fall. You can see that more clearly if we look at the year-on-year changes, and Japan is one of the first countries whose population is actually now shrinking. Other countries are also slowing down, including China, but those are still behind Japan when it comes to this contraction. Another economic problem is that the number of dependent people, so that's the number of people older than 64 relative to the working age population, that dependency ratio in Japan is extremely high at over 50%. So this is a problem for GDP growth because that's the number of people multiplied by how much they produce. And if the number of people isn't growing, then it's much harder to become more productive and boost GDP growth. And that's also bad for the equity market, because if there are less people to sell your goods and services to, it lowers earnings growth and slows equity capital gains. Now, before we go on with the video, let me quickly mention NordPass, which lets you securely manage your passwords across all of your devices. It's very useful if you need secure access to your brokerage accounts, for example, when you're on the go. So here it is on a laptop, but of course you can also access it via your mobile devices. Another cool feature is that it lets you look at how secure your passwords are. So for example, if you've reused old passwords, it can flag that. It even checks whether there's been a breach of your passwords on certain platforms. That'll tell you when you need to update those passwords. And you can also store secure notes. So if you want to make a note of something like an alarm code, store it securely, you can do that on the app. Viewers of PensionCraft get a special offer from NordPass by using this URL or using the code PensionCraft, that's our promo code. You can get 1 additional month for free. So as you can see, you'll get a 50% discount off your 2-year plan. And if you want more details, just click on the link below in the description to find out more. Another problem that Japan faces is its spiraling government debt. Now in the West, we worry about debt to GDP ratios of around 100%. That's the debt outstanding divided by the GDP of the country. But Japan far outstrips other countries in the world when it comes to this ratio. And whereas for other countries this has increased recently due to COVID, you can see France, the UK, the US all shot up recently, but also during the global financial crisis. For Japan, it's been gradually building up since the 1990s. So there's a real question, is this debt sustainable? The only way to get this ratio down is by growing more quickly than the debt, and it's not clear how Japan's going to pull that off. But for now at least, people are still willing to buy Japanese government bonds, and that's why its yields are quite low still. However, for the 10-year part of the curve, the Japanese central bank is artificially keeping these interest rates at zero by unlimited purchases. So think of this kind of like a coiled spring, where if yield curve control stops, it's going to shoot upwards. And I think that could be a cause of destabilization, as we'll see later. Now, Japan is really pulling in a different direction from the rest of the world when it comes to monetary policy. And you can see that clearly if we look at policy rates across the developed markets. Japan is still very accommodative, its interest rates are still below zero, whereas every other country in developed markets has been very aggressively raising interest rates, and that's to stave off inflation. And when the Bank of Japan does quantitative easing, it doesn't do half measures. So not only is it buying Japanese government bonds, it's also buying ETFs, equity ETFs, and Japanese real estate investment trusts. And it's buying them at an incredible rate of 12 trillion yen every year. Such that at the moment, if we look at what the Bank of Japan owns, it has more than half of the outstanding government debt on its balance sheet. And if we look at those equity ETFs, it owns more than 60% of them. Now that's a problem because with bonds, you can just wait till they mature, but with the ETFs, they have to be sold. That's the only way to get them off your balance sheet. And it's hard to see how it could do that without destabilizing markets, given its huge ownership. And for particular government bonds in the 10-year part of the curve, it actually owns more than 100% of some of the issues. That's because it's lent out some of the bonds so that people can short them, and then it buys them back for a second time, which is why it owns more than the outstanding amount. Now, in its January policy statement, many people thought it would stop doing yield curve control. In other words, stop keeping the 10-year part of the curve at zero, because people think that's unsustainable. However, it wrong-footed many hedge funds and many other commentators when it failed to do that. It kept its policy rate at minus 0.1%, and it said it would carry on buying Japanese government bonds, such that 10-year Japanese government bond yields would remain at around 0%. There's actually a 0.5% corridor which it allows around zero. So certainly for the time being, yield curve control stays in place, interest rates remain below zero, and that puts Japan at odds with all the other central banks around the world. How is that possible? Well, if we look at Japanese inflation, you can see that it's increased very rapidly over the course of the last year, and it's currently at 40-year highs. However, it's significantly less than it is in other developed markets. And if we look at Japanese GDP growth, it's kind of okay. In fact, it's above the average, which is around 1% over the long term. And at the World Economic Forum, the Japanese central bank governor, Haruhiko Kuroda, came up with reasons why they're so different to the rest of the world. He began by pointing out that Japan's economy is recovering from the pandemic, which is true of other countries as well, of course. But then he started talking about growth, which was 2% in 2022, and he expects growth will be 2% in 2023 as well. Now that's more than Japan's potential growth of just under 1%. So that means that the GDP gap, which is the difference between the two, is closing. Plus he pointed out that Japan has a very tight labour market. But in Japan, that's seen as a good thing. Now, if you read the minutes of their monetary policy meeting, you'll see that they talk about a price-wage spiral as a positive thing. This is what Western central banks are terrified of. But they see this as a way of getting inflation to a stable 2%. That's a goal which they've had for a long time, which they've failed to achieve. So certainly Kuroda thinks that this isn't a problem, that the inflation they're seeing right now is a result of import prices being high, and that inflation will start to come down over the course of this year. Now he's going to leave office in April, and whoever takes over may have a different view. But what's really critical is what happens to their policy of yield curve control. Now let's dig into the nature of Japanese investments outside Japan. The US Treasury provides data on who owns its bonds, and here are the foreign holders of US Treasuries, represented as a tree map, where the areas represent the proportion of debt which that country holds. So you can see that Japan is the biggest holder of US Treasuries, with over $1 trillion as of November 2022. And if we look at the General Pension Investment Fund, GPIF, their total assets were around 1.5 trillion in 2022, in the second quarter. And they provide this breakdown of their asset allocation. And if we just look at the equity component, you can see that they own $360 billion worth. Now that represents just under 1% of global equity. So both in terms of their bond holdings and their equity holdings, these are so large, these funds, that if they pull money out rapidly, it could destabilize these markets. So why would Japanese funds sell their foreign assets? Well, the way to think of Japan is like a yield-starved, growth-starved country which is desperate for pickups in yield. So when it looks abroad at government bonds, it always compares those yields of their government bonds with its own. So if we compare the 30-year part of the curve and look at those yield differentials, you can see that historically there's been a big yield pickup abroad. And that's been as large as 4% for some periods of time for Italy, say. That was in 2012 during the sovereign debt crisis. But even now you can see there's still a positive yield pickup. So there's still an incentive, if you're not worried about currency fluctuations, to buy these foreign bonds. Now, some Japanese investors can't weather the volatility, so instead they go for hedged foreign bond ownership. When you do that hedging, you can see that the yields change significantly. And what's really noticeable over the course of the last year is that a lot of those hedged yields have gone negative. That's true for Germany, and it's also true for 30-year US government bonds. So what we've seen over the past year is a rapid US curve flattening, and that's had a consequence for Japanese investors because now it's unprofitable for them to borrow short-term in US dollars and then use those loans to buy safe US treasuries. And in fact, when you hedge, it's also not worthwhile buying US investment-grade corporate bonds, which still have fairly small spreads. And in a beautiful paper from the Council on Foreign Relations, this is a paper by Brad Setzer and Alex Etra, and it was called The Disappearing Bid for Japanese Global Bonds. They show exactly how many bonds are held by Japanese banks, but also by other financial investors from Japan. And it's a little bit less than $1 trillion for the banks and a bit more than $1 trillion for the other financial investors. But what's really striking is if you have more recent data and look at the flows of those investments, the flows have turned negative. And the theory in the paper is that that's due to these increased hedging costs, which has made Japanese investors unwind their foreign bond holdings. Now, this is an ongoing process. It's happening right now, but it's happening relatively slowly. I think the catastrophic scenarios kick in if that outflow were to accelerate. What could make that happen? Well, the yen could strengthen aggressively, for example. That's what we'd expect if yield curve control goes away and Japanese yields really start to pick up. That would make the relative attractiveness of foreign bonds simply diminish. Now, we've already seen how destabilizing a rapid increase in bond yields has been for countries like the UK. So this would be problematic for the countries where Japan holds a significant proportion of their government bonds. There might also be pockets of leverage. Remember, that was the problem in the UK. Due to LDI, this liability-driven investment approach, supposedly safe funds had levered exposure to government bonds. And when yields jumped upwards, it amplified the downward move in markets and created a massive liquidity problem. Now, the Japanese central bank says that's not the case in Japan, but you never really know until the bad stuff happens. So worst case is that these fund managers would rapidly unwind $2 trillion worth of foreign bonds. And of course, these things become a self-perpetuating spiral where forced sellers would have to liquidate assets at distressed prices. Now, this is very much a tail risk, but I suspect that this is a sequence of steps which would cause it to happen. Now, we're about to get a change in the central bank governor, so we'll just have to see what the new governor thinks about yield curve control and whether that affects their monetary policy. But I think there's certainly a case to be made that we should worry about what happens when yield curve control is taken away and I think the repercussions could be global and quite negative. Now, don't forget our offer from NordPass. This is also in the description beneath me. There'll be a link there if you want to make good on that offer. And as always, thank you for listening.